Hi, I'm Patty Logan, and I'm a veteran public school educator. I'm also a parent. I'm not a financial aid director, but I have certainly over the years utilized many ways, such as grants, scholarships, student loans, Parent Plus loans, to help finance my education and my children's. So I'd like to share with you some information about student loans. And as always, you do the research, you talk to financial aid officers, become informed so that you make some really wise decisions about your next steps for your future. So let's take a peek. What is a student loan? A student loan is the money borrowed from the government or a private lender in order to pay for college. The loan has to be paid back later, along with the interest that builds up over time. Student loan debt. 65% of college seniors who graduated from nonprofit colleges in 2018 had student loan debt. The average student loan debt is about $35,000 at the time of graduation from your undergrad program. The main types of student loans are federal loans issued by the government and private loans issued by banks, schools, credit unions, or state agencies. Under federal student loans, the students and parents need to fill out the free application for federal student aid, or the FAFSA, in order to apply for federal student loans. The FAFSA requests income and investment information in order to calculate your expected family contribution, or your EFC. The EFC is the amount of money the government believes you should be able to pay for college for the coming school year out of your own financial resources. Now, the different types of federal student loans are these. The direct subsidized loan, it's available to undergrad students whose families can demonstrate financial need. These are the only federal student loans in which interest does not accrue while the student is enrolled in school at least half time. Direct unsubsidized loans are available to most undergraduate and graduate students, regardless of financial need. Interest begins accruing at the time of loan disbursement to the school. And direct plus loans are loans that parents can take out for the dependent students. They usually have a higher risk interest rate than the other types of federal loans. Private student loans are usually obtained through a bank, a school, or credit union, or state agency. Each lending agency will have their specific interest rates and terms for repayment. Since students typically do not have enough of a credit history or steady income to qualify on their own for the loan, a parent or guardian must usually co-sign for the loan. The interest rates of private loans are typically much higher than that of federal loans and are typically variable instead of a fixed rate. Depending on the lending agency, payments may have to begin while the student is still in school. Now comes the loan repayment part. The loan repayment term, this is how long you have to pay the loan back. For federal loans, this is typically 10 years. For private loans, the term will depend on the loan agreement. Interest rate is how much interest you will pay on the loan. Federal loan interest percentages are usually fixed, with your interest rate staying the same every year. Private loan interest rates can vary a lot and may be fixed or variable. And the principal is the base amount you owe for the loan, not including the interest. So here's a sample of a 10-year federal student loan for like an undergrad program. The principal borrowed, let's say, is $35,000. The term would be a 10-year loan. Interest rate, we're going to say 5%. Typical rates are usually between 4.5 to 6%. So your expected monthly payment after graduation would be $370 per month. So the final cost for a $35,000 loan after 10 years of payment is $44,550, with $9,550 paid as interest. So the bottom line is try to limit your need for loans, investigate scholarships and grants. Those don't have to be paid back. Choose a college that you can afford. Work. Consider on-campus jobs, work-study opportunities, or teaching assistant positions. Live within a budget to manage your expenses. And if you do take out a student loan, try to cut down on interest costs by paying more than the monthly required payment. However, check with your lending agency to be sure that there is not a penalty for paying the loan off early. Here are some of the references that we use for today's slides. Ultimately, you need to speak to the financial aid officer at the schools that you hope to attend, that you're interested in attending. Be informed. You are a consumer, so look after yourself, be an advocate, and I wish you the best of luck.